Hey friends, Jason Sipple here. Let me ask you something right up front. How many of you felt like 2025 came at you faster than expected, but deep down, you know you still grew? And how many of you are starting to feel like the game of money is changing and it's time to stop playing defense and start playing legacy? Welcome to the special session. And let me say first, I'm proud of you for being here. Many people could have been here and they're not. Most people are chasing noise, and you showed up to seek a better way. And this session isn't about hype, it's about what actually works. In the next few minutes, you'll experience the 7 moments that define my year and maybe even my mission. You'll learn how I went from broke to cash flow using systems, not salary. Why the real divide isn't rich versus poor, it's borrower or consumer versus builder. The secret banks know and why they're banking that you're not going to know, and why they invest billions of dollars in strategies you've never been taught. A conversation with my son Connor that changed me forever. And finally, the most overlooked money rule that could radically shift your future, no matter your income. You don't want to miss a simple yet overlooked rule. And I didn't plan on becoming a financial educator. I was just a father with a pile of debt, a list of regrets, a lot of fear, and I had to make a decision. Either I let my money keep defining my limits, or I build a system that expands my legacy. And that decision led me here to right now, to this message, and maybe to you. And the purpose, this is a year or a look back at the year, the most impactful transformational moments of 2025, not just for me, but for thousands and thousands of families that we've served. And I've pulled together the most powerful clips from my journey, the interviews, client breakthroughs, so you can learn the framework, not just the philosophy. We're cramming a whole year into just a few minutes. And by the end of this, you're going to know exactly what steps to take and how to make sure that 2026 becomes the most confident, cash flowing year of your life. So let's dive in. And as you're watching, keep asking yourself one question: where in my story am I ready for a shift? 3 years ago, we, the Sipples, were over $114,000 in bad debt, and I was stressed out to the max. We were struggling, and I was looking for a philosophy, something to do with money, something that made sense, because nothing had made sense up to that point in my adult life. I learned how to make money, just didn't know how to keep it and didn't know how to secure my family. And today, I'm happy and excited to report, blessed to report, that we're debt-free. We are funding our lifestyle, we're funding our business, which you guys are all part of, and we're including family ski trips. That's Connor Patrick there in the picture, right? And we're even earning passive income by leveraging our capital inside our infinite banking policies in 3 years, 36 months. And this journey just wasn't about numbers. It was about changing our mindset. It was about looking at where we were, understanding why we were there. And I want to take you guys through that journey. I want to take you through the journey, how we shifted both our financial IQ and our emotional IQ around money. That is the math and the mindset, and it guarantees our legacy, and it changed our life in a relatively short period of time. Here's the thing: you work hard, you search for answers, you want to learn how to be financially free. If you're here, it's because you've worked hard, you've made good money, but you're still not where you want to be financially. That's because earning more doesn't automatically create financial security. The system is designed to keep you in a cycle, earning, spending, borrowing, and hoping for returns. Let's start with the borrower mindset. You might identify with this as the rat race. Living paycheck to paycheck, forever stuck in a cycle of fret and worry that Robert Kiyosaki talks about and teaches in his games Cash Flow. A borrower is someone who makes money. They've got that part down, but instead of controlling their money, they spend it on things that they think they need now, often using credit cards, loans, lines of credit. It's like Wimpy from Popeye. I'll gladly pay you tomorrow for a hamburger today. Borrowers rely on banks, credit cards, and financing for their lifestyle, their investments, and big purchases. They're making other people wealthy. The problem? They're stuck paying interest instead of earning it like the banks are. Now let's talk about builders, the other side of the coin. Builders understand that real wealth comes from paying yourself first and keeping control of your capital. Think about the richest man in Babylon. Think and grow rich. Rich dad, poor dad. Money, master the game. Mapping out the millionaire mystery. Becoming your own banker. They all preach the same principle. The wealthy do things differently. They pay themselves first. They follow the first two commandments. Number one, what is it? Love God with our hearts, our minds, and our soul. Number two, love thy neighbor like thyself. One God, two self, three neighbor. So God, the commandments want us to pay ourselves first. And the wealthy talk about this. It's written everywhere. From my 3,000 plus client calls, I recommend paying yourself 10 to 20% of your income. Some of the most disciplined individuals I met, like a veteran I spoke with recently, pays themselves 50%. And his wife stays home. He's been doing this for over 10 years. And now he has complete financial control. He has freedom of choice. Builders operate differently. They save strategically inside their own systems. They leverage their money instead of spending it down. They put their money to work. They think long term, structuring wealth for their children and their children's children. They have long range thinking. The difference? Mindset and decision making. Again, mindset and decision making. Why don't the seemingly rich stay rich? Because making money is not enough. It's about control, continuity, and systems. These are the principles that the infinite banking concept makes accessible to ambitious professionals, entrepreneurs, and legacy builders like you.
The Vanderbilts were one of the richest families in America, right? Cornelius Vanderbilt, he built over a system of railroads and shipping a wealth of about $100 million. And that was back in the 1870s. Today, that'd be between two and a half, almost $3 billion, right?
Mm.
But by 1973, when all the Vanderbilt heirs gathered together, they noticed something that was really strange. Not a single one of them was a millionaire. Why? Well, they lived a lavish lifestyle. They did not reinvest. And probably most destructive was they didn't have a structured financial system to preserve their wealth across generations. The Rockefellers, well, they built their fortune. It was the largest in American history. And they've still passed that fortune on to today, right? There's over 150 heirs to this day that still benefit from the Rockefeller banking system. How did they do that? Well, they did it through a series of trusts. They did it through disciplined reinvestments. And their wealth continues to grow because they took control of their banking system. And that control through a structured financial system has allowed them to perpetuate their wealth for generations. So, Jason, what's one thing to you that stands out on how the Rockefellers structured the wealth? How can today's professionals and entrepreneurs learn from that lesson?
Well, Jeremy, great question. They mastered the principle of control. Instead of giving up their wealth to the banks, taxes, and Wall Street, they kept their money inside their own financial system, allowing it to compound across generations. That's exactly what we do with the infinite banking process. It's a way to control your money, to build it guaranteed, and to remove it from other families that want to put their hands again in your cookie jar, whether it's Wall Street, the government, or the banks.
Can you elaborate? Because I know that probably sounds really well and good for a lot of our listeners, but can you elaborate what does that mean, right? So how are they actually doing it?
Well, they're doing it in probably one of the oldest entities in the United States. It's really boring, Jeremy. It's permanent whole life, right? Did everybody run away when they heard me say that? It's permanent whole life insurance that's structured for cash value. So with the Rockefellers, because they've been doing this for hundreds of years now, right? Hundreds of years. So the way they've structured it, they have different things in place where they know every time there's a new family member, they're expanding their banking system. They're making a way that they have the money continuing to grow in a guaranteed way that's tax free, that's protected against liens and judgment, that's accessible, and that is giving them, all of that control, that liquidity to use the money. They're able to recycle capital across generations because they thought long term. That's the first thing they did when they built their process. They said, hey, how can we bring this from generation to generation while using the money and passing on, setting up future generations to have the tool of money to be able to do the things that they were passionate about.
Foley, it sounds like something that you need to see the doctor for, something that you might want to go get checked out and get that antibiotic. But what if you learn that it's one of the most popular strategies used by the most powerful financial systems in the world? Now, you might not have heard, or it's not very commonplace to hear about bank-owned life insurance. But the big banks sure do, because they've quietly amassed, or they've quietly quadrupled the amount of bank-owned life insurance that they have purchased and owned in the last 11 years alone. So why are banks choosing permanent life insurance for the primary storage of their Tier 1 capital? And let's break that down. Let's talk about what is Tier 1 capital, Jason. Pop it in the chat below if you know. Tier 1 capital is the most secure and essential money that the bank has. It is the way that the banks can promise to keep the bank stable and running even in tough times. It is their emergency fund. It is their safety net. Is what their Tier 1 money is. And they're required legally to keep a certain amount of Tier 1 money in safe, protected places. And this is why permanent whole life has become such a financial instrument for the banks.
Now remember, you've got to smash some stuff, ring some stuff, and subscribe to the channel. We want 2026 and beyond to be the biggest year in infinite banking. We got to invite more people, spread the message. The infinite banking bus is a big ass bus. And so far, you've learned how I personally went from broke to cash flow using this system. You learned how most folks, 95% of Americans, are borrowers and how they can become builders just like you, and how the shift between how we think is the difference in real legacy. The Rockefellers versus the Vanderbilts, two of the wealthiest families ever, and you see how one squandered all their wealth within 3 generations, while the other is still going strong today. And finally, how the banks are taking your hard-earned money and using it to invest billions into something that is basically guaranteed, which is what we're talking about. So remember, smash, ring the bell, and subscribe to the channel to get alerted to new content. We're going to see you in the second half of this. Some of the best interviews of 2025. They're coming at you fast. Hold on, pay attention, walk away with something that you can apply today. And as always, blessed that you are here. Keep watching. You don't want to miss the best interviews of 2025.
A lot of adults, they hear the word infinite banking or family bank and immediately think, wow, that's complicated. But those adults, they kind of assume something that most people have wrong, that you need some sort of financial background or some fancy degree in order to understand this. But the truth is, it's not complicated. We as adults, we're the ones who make it complicated. But when you teach infinite banking the right way, a way that has systems and processes, you'll find that this isn't complicated at all. You don't have to be a financial genius. It's so simple that a kid could do it, believe it or not. And when you have these concepts in place, we take what's simple and remove a lot of the noise. And today, you're going to see exactly what it is that I mean. My co-host, Jason Sipple, brought on a really special guest today, someone who's been practicing the basics of infinite banking since he was 8 years old, all right? Let that sink in. Now, he's someone who has a healthy financial pattern and parents who teach and value financial IQ. And I hope that you guys really get something out of this discussion today. So Jason, introduce, who's our guest today?
Oh, I mean, this is you guys got to stay in suspense just for a moment because this guest is so special. We've been waiting for him for so long to be ready just to have this conversation with us, Jeremy. First question, Connor, what is money?
I think money is like a trading thing. Like you can trade things for money and you can get money from trading things. Like you can give, I don't know, a computer for money, or you can give them a computer or somebody and then you get money out of it. So it's kind of like a trading thing.
And so, what do you want to get with your money right now? I know that we have a system, right, that we're going to talk about and share with everyone that we've kind of been putting in place for a while now. We call it what? We call it the save.
Share. No. Save, spend, share.
And can you tell the folks what that means? Like, why do we have the 3 S's? We like to keep it in 3s, by the way, folks.
So the save is, so I take my 100% money, I take 60% and save it.
So Connor, when did you make the switch and how did you make the switch? So people hear it's not complicated.
I would say I did it about maybe 3 months ago when I realized that everything I was doing wasn't quite adding up. It was like, if you had a job for $15 an hour and you worked 8 hours a day and you weren't making 120, you're only getting paid 60. You're being scammed for 6 of the hours.
Scammed.
Yeah, it's not really that hard. It's like when you first learn, I don't know, multiplication, it might take maybe a week or so, but after that, you can get it down really easily and become really good at it. It's the same thing here. It seems super difficult, like, oh my God, how am I ever going to understand this? But it's really not that hard. It's just save, spend, share. That's the model. And if you follow that with a policy, you should be fine for the rest of your life.
Well, and as a man, as a father, as a dad, as a husband, we carry that daily weight on our shoulders. We are supposed to be, the providers. It's not that way in every household, but we're the ones at the end of the day that's supposed to come up with the solutions. Nobody's asking us how we're doing, how we're feeling, because it doesn't matter. We got to show up. We got to put out. We got to make things happen. Do our feelings matter? Absolutely. All that matters. We know that. But as a man, this world doesn't care. And I think for me, if I can make an impact with guys that I know that are struggling, they're smiling, but inside they're having a hard time. There's a reason right now, farmers are one of the most probably suicidal group of individuals there are, because of the debt loads and the interest rates and the commodity prices. And you can go from having a great year to not being in business and not having anything else to fall back on. And so it's extremely stressful. Like you start talking about equipment prices and land and taxes and all these things that incorporate what a farmer does in today's society. It's kind of crazy. So I've left with what I can see now. I want to prove it a little bit longer before I go just really aggressive, but I've already got a list of guys' names that are going through my mind that I want to be a solution to some of their problems in the near future. And how can I not share this? I mean, it would be, like you said, I'm kind of mad I didn't pick it up 10 years ago, because it just would have been that much better, that much sweeter. But it's, we can't dwell on the past. We got to take off where we're at. So I'm just trying to make it for lost time. Don't give up hope. There's always another day. Your darkest hour, it's not that dark for very long. Peaks and valleys of life. It's just that. We have bad days. We have good days. The bad days make the good days that much sweeter. So persevere, stay connected with the family, and don't do anything too drastic in a time of need.
When you're last in line for your money, guess what's going to happen? It shows that you do not value or love yourself enough. The first rule of wealth creation is pay yourself 10%. Pay yourself 10%. Automate it. Make it automatic. Because if you're not going to own your cash flow, someone else is going to. If you're not going to create a system that pays you first, you're creating a system that pays everyone else. And an example of this, if you're earning 1,000 a week, save 100. If you're earning 10,000 a week, save 1,000. This habit becomes that seed, right? You're always out there planting seeds, and you're going to reap what you sow. And so when you're planting those seeds and you're dropping a little seed here and a little seed there and a little seed there, over time, they're going to add up to be a great big harvest. Let's quickly recap what we uncovered today. In 2025, we saw how going from broke to cash flow starts with beliefs and mindset, not the math. We defined how we can shift our identity from borrower to builder, and why that identity change matters more than the amount of money we earn. We learned why the Rockefellers still thrive and why most high-income families don't. We expose what banks are really doing with billions and what that means for your strategy. We witnessed one of my proudest moments of 2025, the father-son moment that proves that legacy is, in fact, teachable, no matter how young your children are. And we heard wisdom from Corey on ownership, relevance, and intentional living, how he shifted from being a borrower to being a builder and what that means for him and his family going forward. And we learned it all starts with rule number one. Rule number one, pay yourself first. Without following this law of wealth, you'll remain like the majority of Americans, stressed, worried, and too far away from their money. And that moment with my son, Connor, that one hit the hardest for me because it wasn't about the money. It was about his clarity, about a new generation not inheriting confusion or chaos, but confidence in their thinking. And that is the legacy that we're aiming for. That's why we do this. And you came here to reconnect with what matters financially. We walk through 7 moments in 2025 that show you not just what to do, but how to be. Remember, this is about your actions, your doing, your thinking. And now that you have the clarity, you have the filter, you have the framework to carry into 2026. So here's the question I'm going to leave you with. What's your rule number one going into next year? What is the thing that you are going to prioritize? And if you don't know yet, that's okay. Just make it a ... yet. But if you do, write it down, connect those neural pathways, then act, because nothing happens in life without action. You have to fail forward. I'm going to see you all in the next video, making sure that you're smashing, you're liking, and you're ringing the bell. Subscribe to this channel. As always, blessed for your attention, your time. Grateful for being part of your journey. I'll see you in this next video. God bless. See you again soon.